Hey there, this is George. In today's video, I'm going to talk about investing opportunities that may be interesting for you to expand your investment portfolio if you like environmentally friendly cars and advanced technology. There has been a lot of hype about Tesla and other companies entering the market because they see that any activity related to saving the planet and reducing customer expenses, such as the cost of gasoline, will pay off in the future. Therefore, if companies are interested, investors are also interested, since they will benefit from the success of these companies. The electric car market is growing fast and expanding to many countries concerned with climate change. The global electric vehicle market size surpassed $200 billion in 2022 and is expected to touch around $1.7 trillion by 2032. This means that this market is not yet saturated, and it seems that it will grow more. What I'm trying to say is that we have to take advantage of this opportunity and evaluate some of the companies operating in this market before it reaches its peak. The electric car market is becoming very popular and more competitors are emerging in it. As more people become aware of the damages of climate change, people are starting to buy more and more environmentally friendly cars like hybrid or fully electric cars rather than internal combustion engine cars. Also, the governments, among other institutions, are encouraging people and imposing some regulations so that the consumption of these vehicles increases. Therefore, because of the popularity and investing opportunity for some people to invest in this market, I'm going to analyze the financials and some performance ratios of the three leaders in this market. These are Tesla, Li Auto, and BYD. I'm going to start talking about Tesla, that although it's not going to give you a massive return in the short term, it may be suitable for your portfolio if you want to invest in this market without taking too much risk. Tesla designs, manufactures, and sells electric cars, components for electric vehicles, solar roofs, photovoltaic solar installations, and home batteries. Tesla has made many millionaires that were investing from its beginning. Its price per share has been multiplied by 24. This is an increase of 2,290%. Its current market share in the US is 60% and its market capitalization is $885 billion. Its price per share skyrocketed in 2020, going from $30 per share to $407 in 2022. After struggling to turn a profit for years, in 2020 they closed the first full year in the black, or in other words, making a profit for the first time. A stock split in the summer of 2020 made Tesla shares more affordable for individual investors, but Tesla's addition to the S&P 500 index later that year helped even further, because this compelled funds that track the index to buy their stock, making its price per share skyrocket. Tesla is also getting a very good reputation in the market and in turn customer loyalty. Their products, branding, and growth strategy have made them become one of the brands with the most sales in the global market, with more than 1.3 million cars sold in 2022, along with BYD. What is clear is that they have a great competitive advantage with respect to their competitors, and this is crucial for their success. However, we have to be careful when investing in new markets because we've been through 2 recessions in the last few years, and now we are recovering and seeing a little bit more economic growth. As Warren Buffett suggests, in times of uncertainty, look for businesses with a great competitive advantage and low debt. Although Tesla is primarily known for making electric cars mainstream, it doesn't stop there. It has other innovations linked to vehicle and battery technologies. For example, Tesla is hard at work improving its self-driving technology, hoping to be the first car company to introduce full self-driving capabilities. Besides that, Tesla is also working on innovations in battery and other technologies like the Powerwall and solar roof to help reduce our dependence on non-renewable energy. One of the things that stopped the widespread adoption of EVs is the lack of a charging network. Aside from the long time it takes to fill an electric vehicle battery, there's also a limited number of charging stations. However, Tesla knew this was going to be one of the things hampering the purchase decision of many buyers, so they invested in a supercharger network. As of 2023, Tesla has around 1,200 supercharger stations all over the US, ensuring that Tesla owners can travel from coast to coast without worrying about running out of charge in between. It looks like Tesla is one of the companies with the most competitive advantage with respect to its competitors in the sector, but let's review the numbers to see if this is true. As we can see, the total revenue has been growing in the last 3 years, and even taking into account the economic inactivity and the recession that has occurred during this period. It is also true that these vehicles and services are aimed at people with more income, so this stage of the economic cycle is not as important. One of the big problems in this industry is the large production costs that, as we can see, have also risen due to both inflation and the scarcity of some raw materials necessary for production. However, it is being profitable for them since gross profit is also growing notably, even though the margin is the same, as we can see below. We also see that the money allocated to research and development is greater every year, which will mean better products and services in the future, and take into account that its competitors do not invest as much in R&D. Its net income is also growing exponentially. For example, 8 times more profit in 2021 than in 2020, and more than double in 2022 than in 2021. Almost $12.6 billion last year, being one of the companies in the industry with more net profit. They also have a lot of cash available in the company, approximately $16 to $17 billion in cash, and they have been reducing their debt from almost $12 billion in the past to $3 billion now. Let's now review some of the important ratios that measure liquidity, debt, efficiency, and profitability to know how this business is performing in all these areas and to know if they are managing well their resources. If these numbers aren't good, it's more likely that they will have worse results in the future or even go bankrupt. A good current ratio value is between 1.2 and 2. A value of 2 means that the company has 2 times more current assets than liabilities to cover its debts. Below 1 means that the company doesn't have enough liquid assets to cover its short-term liabilities. If we calculate the number in Tesla, we get 1.57, which is enough and in fact a healthy number. The debt-to-equity ratio shows how much of a company is owned by creditors, that is, people it has borrowed money from, compared with how much equity is held from the company. The debt-to-equity ratio of Tesla is 11.32%, which means that 11% of the company is owned by banks or other lending institutions. However, this number is low compared to its competitors. And again, this is crucial because during recessions or moments where the economy is experiencing stagflation, some companies with high debt may go bankrupt. Inventory turnover measures how often a company replaces inventory, or in other words, how fast they sell the stock. In this case, this ratio is important because Tesla doesn't want to have cars parked at the dealership waiting for someone to buy them for a long time. A good inventory turnover ratio is between 5 and 10 for most industries, which indicates that you sell and restock your inventory every month or every 2 months. This ratio strikes a good balance between having enough inventory on hand and not having to reorder too frequently. Tesla's inventory turnover is 6.28, which is good, so another positive thing about Tesla. Another important ratio is the net profit margin, which measures how much net income is generated as a percentage of revenues received. Tesla's net profit margin is almost 14%, higher than I expected considering the high cost and expenses of operating in this industry. It's always good to compare these numbers with other companies in the same industry, so don't miss the next video that I'm going to post where I'm going to talk about Li Auto and BYD, its closest competitors. The PE ratio provides an indication of whether a stock at its current market price is expensive or cheap. This ratio is good as well to compare companies in the same market or industry. As we can see, the PE ratio of Tesla right now is lower than in previous years, only a little above the values of the last semester. As of today, Tesla's PE ratio is 75, meaning that the stock price could be undervalued. Overall, we see that Tesla's numbers are strong considering the emerging and risky market they are operating in, its competitors, and the past of the company. Even Elon Musk said that it's very challenging to maintain these numbers and make a profit in the electric car market. He also stated that the only car companies that have not gone bankrupt in this market so far have been Ford and Tesla. If you guys want to see the comparison between Tesla and its other competitors like Li Auto or BYD to know which company may give you better returns or suit your investment goals, just go to my channel and watch the second part of this video. As I always say, investing is a difficult and risky task, so if you're gonna invest, remember to do your own analysis, ask experts if you can, and never invest money that you cannot afford to lose. I hope you liked the video and that you subscribe and follow me on social media. If you want more content like this, evaluating companies, just say in the comments below, and see you in the next video.